Hey everybody, you got the Melanie J Financial Advising Team. I'm Hunter.
And I'm Reagan.
Yeah, very good. So you might see wondering why we're in this setup. We're about to film a podcast right after we do a quick market update that we're sending via email.
Yes.
To get started, we had our client appreciation party on Friday, which was an amazing time.
Yes, it was awesome. It was great to be able to see everybody. I think we had well over 230, 240 people show up, which was incredible.
Yeah.
But it wouldn't be possible without you guys, so thank you for all that you do.
Yeah, anytime we get to appreciate our amazing clients who trust in us, it's just an amazing time.
It is,
so much fun, and we look forward to next year.
Yes,
always.
yes.
Such a good time.
Already planning.
Yeah. But yeah, a quick market update for us today. As you guys seen, there's been some volatile headlines regarding tariffs, inflation, everything like that. Reagan, I'll kind of let you get started on what we're thinking, what we're seeing.
Yeah, so I mean, we're about halfway through the second quarter. I don't know if you paid attention a lot to the market at the beginning of the year. Towards the end of the first quarter, we did see quite a bit of volatility, actually a pretty big drop in the equity market, which was all reactionary to or emotional trading based off of the uncertainty of tariffs. So I know a lot of the headlines that you see right now are based off of what's happening with tariffs. They're implementing 25, 50% on steel from different countries, or just XYZ, whatever the percentage is. There's just uncertainty around that. So there's really no quantitative evidence exactly what that exact number will end up being. I mean, it's really a lot of it, I think, is going to be end up being a negotiation tactic, which we've already seen that some, where they have began negotiating the tariffs and negotiating trade. What that ends up being, who really knows? But that also kind of ties into why it's important that whenever we meet with you guys and when we're creating your plan, from day one, we diversify our portfolio. So whenever you see big drops in the market, that may not mean, like if you're watching the headlines and you see, the S&P 500 is 20% down, that doesn't mean that your portfolio is, in retrospect, the exact same decline.
Yeah. That's just daily market volatility.
Exactly. And
that's all it tracks.
And that's why it's important that whenever you're looking at that, you don't let your emotions get involved and make irrational decisions just based off of that emotional thought of, oh my goodness, the market's going down. Right. Something that I heard recently that's actually a really neat thing is whenever you see market volatility creates opportunity.
Exactly.
And
especially if you're funding the portfolio, or dollar cost averaging, hey, you're capturing the lows in the market, which is one of the best things you can do.
Yes, absolutely. So if you have dividends reinvesting, even if you are a more conservative investor and you have a lot more bond exposure, which for those who did have more bond exposure didn't see as big of a volatile drop in the market or in their market value because they had that diversification. Even like if you saw with the S&P 500 being down, that if you had some international, that actually performed really well. While a lot of U.S. equities were down, a lot of international was up. Now, that doesn't mean we need to... I think the one thing that's important to remember is whenever we're investing, looking forward to what we're anticipating, it's better to look forward in what we're anticipating in the market rather than investing in things in the past that have performed. So that doesn't mean let's go take all of our portfolio and throw it into international now at this point. But I think that's really important to look at that. Yes, even though we see that downturn, it does create opportunity. Whether you're adding money into your investments or not, your investments are working for you. We're consistently and constantly going through and making change, dividends and interest being reinvested. So that's an important thing to remember. But then I think it's also a good thing to think about going forward, because there's still the talk about tariffs. There's still the talk about wars that are going on with Israel and with Ukraine and Russia. There's always going to be uncertainty. I mean, if you look at headlines back into the 20s, the 30s,
any possible year.
If you pulled a picture and the headline on it, you would really not even know the difference between now and then.
Exactly.
All we do know is that at the end of the day, history has shown that it's going to work itself out. Right. Now, what the exact implication the tariffs are going to impose on the economy and on the market, we really won't know quantitatively what that's going to look like, probably for another year, 1 to 2 years
just to even see.
So I think whenever you see market volatility, think of it as opportunity, really.
Right. We're buying on sale.
Yes.
That's right. I mean, even with the opportunity, year to date, S&P 500 is still up 2.39%.
Yes.
The NASDAQ up 4.3%, and the Dow is up 1.47%.
Yes.
So, I mean, even with that volatility year to date, we're still positive. That could change, obviously.
Yes.
But I mean, there is some good news, Mark, right? USA and China, it seems like they are coming to a deal. Hopefully, looks like US tariffs 55% on Chinese goods coming in, and China charging us 10% on our goods coming in. So it means we are getting closer to a deal. It's not perfect, no, but that means it's going to remove some uncertainty, some volatility. Inflation came up a lot slower in May, 0.01% at
Yes, a lot lower than what was expected.
Yes, which is fantastic.
Yes.
So we're still looking at that September mark for a possible rate cut. That's going to be great news for the market as well.
And jobs creations and employment is good. So that's the one thing that the Fed, their mandate is full employment and inflation.
Right.
So if those continue to improve, and especially since the economy is actually showing resiliency still, even through, even despite the tariffs and everything that's you see on the headlines, it's still looking like the possibility for rate cuts is probably going to happen.
Yeah.
How many that is, who knows?
We don't know.
Yeah.
It could change, but September is kind of what we've been saying for months now, almost probably a year. So hopefully that's what happens.
Yes.
We'll just have to see. But regardless, we're on track with your goals. We're on track with your plan.
Yes.
Always know we're here for you guys. Give us a call, please, if you ever feel worried, scared. And, that's never one thing we want to happen is to let your emotions play into this.
Yes.
So.
And I think it's important too. I mean, we're about halfway through the year, so it's a good time to be thinking about if you're not funding a Roth or a traditional IRA monthly or systematically, if you like to lump sum fund it, I mean, it's a good time to be thinking about, hey, maybe we need to put some money into the market and start letting that money work for you. And obviously, we need to talk about if it's a Roth IRA, we need to make sure that you're eligible for it and all that. But yes, it's a great time. It's a great time to be adding money to the market. That's for sure.
That's right. Awesome. Well, that's all we have for you guys today on our market updated video. Tune in, be looking out for our next podcast episode coming out soon. Y'all have a fantastic day.
Thank you.